Welcome back. I am Pratap here. Today is the 24th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. I will also explain how the other reports from our premium service reports are going to helpful to you. That is also I am going to explain. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you can find the tab posts, or you might be seeing a tab called community. One of these tabs you might be seeing. Whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. So far we have completed 25 training lessons and you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and then strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Currently I am showing you Bank Nifty. We have a Bank Nifty. High liquidity zone is available here. Rally, base, drop. And this is a TCO zone, trend change horizon. Lesson 25 I have explained about the concept of trend change horizon. It is a high liquidity zone. And this high liquidity zone, TCO zone, is having capability to act as a high liquidity zone and also, act as a high priority high liquidity zone, and also later on it will change to low priority high liquidity zone. When it will work like a high priority high liquidity zone, when it will change into low priority high liquidity zone, those concepts also explained in detail in lesson 25. Lesson 25 we have 3 video parts. In each video I have explained all these scenarios one by one. Okay, how do we know this is a trend change horizon, rally, base, drop? It's very simple. Currently it is supporting a bullish trade setup. Bullish trade setup for a 5 minutes time frame. I'm not talking about 15 minutes time frame as an ITF. I'm talking about 5 minutes as an ITF. If 5 minutes is the ITF, then what is the LTF? 1 minute is the LTF. Okay, see this is currently supporting bullish trade setup, rally, base, rally. A recently created demand zone. After that again a rally, base, rally. And then this rally, base, rally. This is the one. Rally base. This is not rally base rally because this is a medium size leg candle. This is the large candle. This can't be. If you draw this zone, it is a compromised. But you cannot compromise at 5 minutes level, especially at the legouts point of view. Anyway, NeoStock Software doesn't compromise while drawing the zones. We have to compromise. If you want to compromise and draw the zones, you have to do it only in the you have to do manually, but yesterday someone asked a question at the time. Probably by seeing the question, I thought some of you might be having confusion. While compromising the zones, do it only when you are fine-tuning the zone. Suppose you need to fine-tune up to 5 minutes time frame. You can compromise at 75 minutes level or at 15 minutes level if it is a 75 minutes high liquidity zone. Why you want to compromise If you don't compromise, you won't draw the zone. At the time, you may not be in a position to identify the fine-tuned 5-minute zones. Sometimes the 75-minute zones or 15-minute zones, clarity might be missing. It looks like a zone, but some points might be preventing you to draw the zones. At the time, if you compromise and draw, and at lower time frames, so for example, 75-minute zone, you have drawn inside daily high liquidity zone. You compromised. But you have a proper 15-minute zone is available, fine-tuned zone, inside the compromised 75-minute zone. Again, within that fine-tuned 15-minute zone, again you have a proper fine-tuned 5-minute zone where you are planning your trade. Then 75-minute zone, whatever you compromised and drawn is a valid zone. Many times what happens, if the lower time frames are not good, even if you draw compromised 75-minute zone, still the order flow in 15-minute zone or 5-minute zone may not be proper. When they are not proper, you don't draw the fine-tuned zone. But sometimes when you compromise the 75-minute zone inside the daily zone, or need not be 75, you have a proper 75-minute zone, but you compromise and drawn the 15-minute zone. But inside that compromised 15-minute zone, you have a very good 5-minute zone structure. So it is an institutional order flow, that way you can confirm. But the 5-minute zone where you want to take entry, if you compromise, it's not a good scenario. Generally when you compromise, you have a very good leg out, you have very good base, and you have leg-in candle is not really good, leg-in candle. At the time, you compromise and draw. And sometimes what happens, you have a very good leg-in, you have a very good base, and you have a leg-out candle, it is not really convincing leg-out candle. You have some kind of doubts, something like this. See this rally candle, is it really a medium size candle or is it really a large candle? You have such kind of questions in your mind. At the time, you can compromise and draw 15-minute zone or 75-minute zone inside the daily zones. But you cannot compromise at entry time frame level. When you have some doubts at 5 minutes time frame level, better leave that zone. Even if it is a valid zone, later on you realized you got a good test and after that prices came down. Even if you miss the trade, okay, not a problem. Rather than stopped out trade. So here we have a rally, 2 base candles and a rally, excellent leg out candle. This is the recently available zone. And the trend is uptrend. Currently market is supporting bullish trade setup. Prices are moving from here, moving up. And during this process, none of the zones are 5-minute zones are violated. And this is the first 5-minute zone is violated. How it is violated? Rally, base, drop, and this is a drop candle completely removed this zone. That means it took the order flow. Now immediately this zone is changed as a trend change zone. Trend change origin, TCO zone. Okay, this can be used as a either entry time frame or it can be used as a intermediate time frame, and then you can take a trade in 1 minute time frame. That way also you can plan. But anyway, this TCO zone I am using for the entry purpose. Generally high liquidity zones I have limited up to 5 minutes time frame. The advantage of high liquidity zones are they have the ability to give you the target up to the next immediately available 15-minute zone. Whether it is a high priority high liquidity zone or low priority high liquidity zone, if it works well, it gives you the price up to the immediately available 15-minute zone. You get good trade opportunities. That is point number 1. Point number 2. They will also give you good RR. At least minimum 1:3 RR or beyond 1:3 RR they will give. So these are the advantages of high priority or low priority high liquidity zone. What is the difference between high priority and low priority? High priority high liquidity zones, they have the success rate, more success rate compared to the low priority high liquidity zone. For example, if you take a daily or 75 minutes high liquidity zones, we already defined a strategy. I have explained in lesson 21.3 high liquidity zone strategy. That is part 3 of lesson 21. I clearly explained the strategy. The daily and 75 minutes high liquidity zones, they have 80% success rate. Failures are very less. Success is more. But then what about low priority high liquidity 75 minutes or daily low priority high liquidity zone? Maybe they might be having a success rate of 55% or 60%, or maybe sometimes 65%. So compare it to high priority high liquidity zone, their success rate is less. But if they are successful, if the trades are successful, the return will be the immediate opposite side target, 15 minutes target zone. Your entry is in 5 minutes, but your target is 15 minutes zone. Your entry is a fine-tuned 5 minutes zone inside the high liquidity. This is one advantage of high liquidity zone strategy. But what about 15 minutes high liquidity zones or 5 minutes high liquidity zones? They will also work, but you can't expect 80% success rate for them. Maybe their success rate could be maybe a little above 50% or 60%. If the risk is minimal, you can plan a trade. Sometimes they will be violated. You have to accept the stop loss. But many times they give you good success. At least they have a success rate up to 60%. In between 50 to 60 or even 65% success rate will be there. They support multi-tests multiple times. And if you look into this, okay, we identified manually, but anyway our software is helping. We have, every day I am publishing supply demand zone chain for NIFTY and Bank Nifty. See here, NIFTY, it is only one supply zone is there. It is yesterday's report I have displayed this. It is having a TCO supply zone, but is it a high priority TCO or low priority TCO? Our software is not telling you whether it is high priority TCO or low priority. It is just telling you. But I already explained how to identify high priority, how to identify low priority, when it will be converted to low priority. That is what I told you. Let us see, we already identified this is a trend change origin. The reason is currently the bullish trade setup has been violated. The 5 minute zone has been violated. So this is a 5 minutes TCO. Generally 5 minutes can be used as ITF time frame. At the time 1 minute is your entry. But anyway 5 minutes risk is very small. We can directly take a trade from 5 minutes itself. Why we go for lower time frames is to minimize the risk. So 5 minutes itself we are planning our trade. But what about what kind of zone it is? Is it high priority TCO or low priority TCO? See, if a new supply zone is created after rally base drop, this is a TCO. If a new supply zone is created, this TCO will be changed to low priority. If the new 5 minute zone, because this is a 5 minute TCO, if a new supply zone, 5 minute supply zone is not created, this will be acting as a high priority, high liquidity zone. Is there any new supply zone is created after rally based drop? No. This is yesterday when it is created at 15:10 leg out candle. After that you have a base candle. After that you have a base candle. After that again you have something like ERC candle, failed ERC candle. So there is no zone is not available. Zone is not there. You have a failed ERC candle is there, and this can't be used as either leg in or leg out. Either way you can't use this. It is not qualified. Failed ERC candle can be used as a leg out only in some special scenarios that already explained in one of the high liquidity zone and also one of the Q&A sessions also. I didn't remember, maybe Q&A 2 or Q&A 3 or Q&A 4. I didn't remember exact Q&A number, but one of the Q&A lessons I have explained. We have a dedicated session only for explaining failed ERC candle. And also we have a dedicated, not dedicated session, we have a special session in HLQ analysis video. That video I kept in the important analysis and strategies playlist. If you look into that playlist, you can find that video. Okay, anyway, This is not a qualified leg out, but it is a failed ERC. So currently, next, this is a today's candle. This is also ERC candle. This is also like a failed ERC candle. So you can't use, currently no supply zone is created. Until a new supply zone is created, 5-minute supply zone, this 5 minutes zone will be working as a high priority, high liquidity zone, TCO zone. But today morning 9:15 candle, actually it entered into the zone. It took a trade. But if you draw wick to wick, morning 9:15 minutes candle you get. But 9:15 candle getting trade is not easy. Many times the volatility is very fast, quickly, fraction of a second before you place the order itself it will. Actually if you go to 1 minute also you will get clarity. See here, this entire price action is within. Getting the entry, reaching the target, everything happened in 1 minute's candle itself. And now we don't have clarity. It is open here. After that it took the entry and came down, or it came down and again reached this target and again came up and again entered here and again came down and closed here. We don't know, anything could happen. Generally morning 9:15 candle, volatility is very high in the market. You see a huge change. After that, the end of the 9:15 candle, some stability will take place in the market. 9:16 candle onwards, you have better clarity. But anyway, let's go to the 5 minutes time frame. Before creation of the new supply zone, after that again you see, you have again drop candle, maybe a base candle, maybe another base candle. This is again a ERC candle, failed ERC, bigger candle. See, this range is very big, bigger than these two candles. And after that again you see a rally candle. No supply zones are created. So far, no supply zones are created. Actually, how we planned the trade to minimize the risk? Type 3 proximal entry we are taking because risk is very high. Type 2 proximal, see the risk is very big, huge risk. That's why, see, while type 3 also we have enough risk is there, but this risk is within accepted limit. And added some entry buffer also, some entry buffer. That way I have drawn this blue color line. Because you are taking type 3 proximal, there are higher chances that you may miss the entry. That's why always keep, whenever you are taking the type 3 entries, add some buffer, some percentage. It need not be exactly 0.1, it can be less than that. Maybe 0.05%, 0.6%, 0.7%, up to 0.1%. Some buffer we have added. Okay, anyway, the prices reached beyond this entry buffer. It just touched the distal line, proximal line, type 3 proximal line. And after that it reached the 15-minute zone. Where is the 15-minute zone? Go to the 15 minutes time frame. See here you have a rally, base rally. This is the valid. Maybe you may say here you have a rally, 2 base candles rally, or maybe this is ERC candle as a leg-in. This is a base and rally. But these are all gone. It is not a valid zone. This is only the valid 15-minute zone, rally, base, rally. At the time we took the entry, and after that it reached the 15 minutes target. And the trade is completed in just 1 hour, less than 1 hour. Go to the 5 minutes time frame and see when you got the entry. You got the entry at 9 o'clock, 50 minutes, 5 minutes candle. When it reached the target, 10 o'clock, 45 minutes. So that means in 45 minutes, 55 minutes the trade is completed. That means almost 1 hour the trade. And how many points Bank Nifty has given? First of all, how we identified this trade? We identified this trade by looking into Bank Nifty supply demand zone chain. Every day Bank Nifty, Nifty and Bank Nifty supply demand zone chains are available in your NeoStock reports. software reports. Of course, at this point of time, only premium subscribers are accessing these reports, and other users will be accessing these reports after 1 week. Because you get only as a delayed 1 week reports for the reference. Especially the delayed reports might be helpful for long-term, long-term means swing traders. Not long-term, swing traders. Or positional traders, whatever you name. Swing or positional traders. That means the WIT traders or MIT traders, those reports, 1 week delayed reports will be useful. If not all stocks, but at least some of the stocks, bullish or bearish trade setups might not have been executed within that 1 week. Some opportunities you might be missing. The advantage for the premium subscribers, every day they get fresh reports. But still after 1 week you may find few stocks, and you can take the swing or positional income trade related stocks in the remaining stocks. Assume 10 stocks are displayed, the weekly income trade and WIT income trade. Out of 10, maybe 4 stocks are executed during that week. You will be missing those opportunities. Premium subscribers, every day they get fresh reports, they get those opportunities. But you might be missing. But the remaining 6 stocks which are not executed, maybe in the coming week they might be executed. Or maybe they may be invalid also. That possibility is also possible. Because the report is displayed. After 4 days again a new demand zone is created. The previously whatever software reported as a high liquidity, bullish trade setup zone might have been changed. That way sometimes you may see few invalid. But manually you need to identify properly by doing. Because you already learned the subject, you know how manually you can eliminate those zones. But the advantage will be always for premium subscribers, because immediate zones are available. Immediately next day whichever the trade they get out of those stocks, they take the trades. That way they will be always on time. But still those reports are useful to people who are not taken the premium subscription. So that is the reason why after 1 week I am publishing to everyone. At least some opportunities you will find. If not complete opportunities. Definitely those reports may not be useful to the short-term traders. Like intraday traders or short-term like DIT traders. The 1 week delayed reports will not be useful. But people who are learning supply demand zone, those reports will be helpful. How these bullish trade setups are working. How many trades they got executed after the report. That kind of verification, people who are learning the supply demand zone concepts, those reports will be useful. The main reason why I am displaying after 1 week, for the learners those reports will be useful, and also swing traders also at some extent those reports will be useful. Definitely intraday traders and short-term traders, those reports will not be useful. You have to take subscription. There is no other choice for you. So that's why I'm showing you here the Nifty and Bank Nifty, the 5-minute zone, how it worked. There is one main reason why I'm showing this. Because some of you are only depending on the high liquidity zones. Of course, most of the time within a month, high liquidity zones. Suppose if you have 21 trading sessions in a month, at least 15 to 16 trading sessions, high liquidity zones will give you some good trades. But remaining 5 days or 6 days during that month, the high liquidity zones may not be executed. Maybe 1 or 2 days, the high liquidity zones, you may see only few high liquidity zones, 1 or 2 zones. Sometimes you may not get trade. At the time you will be sitting ideal, right? I don't want you people to sit ideal. When you are buying these software, when you are buying these reports, you have to look into the other reports, because you learned all these concepts. If you did not learn, then that is a different story. But you already completed your course. You practiced a lot. And the last 1 year I have provided free services. Almost 10 months I provided free service. At the time you practiced a lot. So you should also look into Nifty and Bank Nifty, because previously also few days I have explained about Nifty, Bank Nifty related trades also. How to make use of the supply demand zone chain. Always I am telling you, look into the high liquidity zones. Recently you learned TCO zone. Because recently you learned, you practiced, this is a good choice to understand this concept by taking trades, Today you got 2 successful trades. That is what I am going to show you. The first trade you have taken, this is a high priority, high liquidity zone trade. TCO is acting as a high priority. After that it changed to low priority zone. When it is changed to low priority, again a supply zone is created. Rally 1, 2, 3, 4 base candles and again a drop candle. Here it is changed as a supply zone. Even you can draw this ERC candle, 1 base candle, 1 drop candle. This also you can consider. Drop base. This is a failed ERC candle, failed ERC as a leg-in. You can consider this like a drop candle, base candle and drop candle. Drop, base, drop. A new supply zone is created. But the moment you took a trade, it is acted as a high priority, high liquidity. Because it is acted as a high priority and it created the new zones and finally it reached the target. How much profit we got? And moreover, what is the RR it gave? It has given 1:4.13 RR it has given. That means 1:4 RR we got. And what is our entry? The entry price is at the blue color line because we added some entry buffer. The blue color line, the entry price is 54,151, the index value. So let me copy and let me take the calculator. Let us see how much profit we got. 54,151 minus. And what is the target? That is profit level. That is the 53,000. Because it is a short trade, the value should be less value to get the profit. So the 15 minutes target is on. The value is 53,975 rupees. 975, the index value. 53,975.10. So how many points we got? 175.9, close to 176 points we got the profit. So what is the margin, the lot size and margin? Let us look into the the margin calculator. So Bank Nifty. So current ongoing month is September future. So tomorrow you have Bank Nifty expiry. So I am selecting that. What is the cost? Approximately 1,08,000. This is at the closing price. Maybe the value could be a little high or less, that we will see. Approximate value I will add. So into 15. You got 2,638 rupees profit for your first trade. How much ROI we captured? So where exactly it closed today? So here you closed, but you took the trade here. And at this closing, this is the value, closing value. It might be a little high, probably it could be 1,08,000 because you took the trade here. After that, prices might be going down. So approximately I can say 1,08,000, say 500 rupees. Instead of 234, 500 rupees. The value might be more. If you add 1,08,234, we get more ROI. And if you add 1,08,500, ROI slightly it will reduce. But still okay, because the value we took at the higher price. So that's why approximate value I am giving. Okay, into 100 divided by 1,08,500. This is the cost. Cost of one future slot for Bank Nifty. This is the cost of one future slot. And cost at what price? Somewhere here our entry price. This is the approximate value. It could be maybe 450 rupees or 400 or maybe it could be 550 rupees. But approximate value. So we got a 2.43%, 2.4% ROI we got on the first trade. So 2,638 rupees 50 paisa we got profit. Okay, after that what happened? It has given one more trade. Exactly within this entry buffer area it reached, and then reached the next 15 minutes target, because a new 15 minute zone is created here. Let me go to the 15 minutes time frame. See here you have a ERC candle, and then a base candle, and then a rally candle. So you can consider rally, base, rally. See, next time it touched and again it reached the target. See here in this candle. When it gave you the entry, let me go to the 5 minutes time frame to get better clarity. We got entry in this candle 14:10. That means today afternoon 2 o'clock 10 minutes we got the entry, and then when it reached 2 o'clock 20 minutes candle it reached the target. Let us go to 1 minute to get the exact clarity. Today exactly at 2 o'clock 10 minutes we got the trade, and at 2 o'clock 22 minutes. That means in 12 minutes the trade is completed, and moreover it has given 1:3 RR. Let me go to 5 minutes time frame. We got 1:3 RR we got. Here it gave 1:4 RR first trade, second trade we got 1:3 RR. So minimum accepted is 1:3. If you are a highly experienced person, 1:2.5 also you accept. Anyway, it gave 1:3 until this 15 minute zone. So what is our entry? The same entry price, 54,151 is our entry. First trade also we have taken at exactly at the same price, minus, and what is our profit level? 54,021, 40 paisa. 54.21. So how many points we got? 129 points. So lot size is 15. So into 15, you got 1,944 rupees. You got the profit. 1,944 rupees. Close to 2,000 rupees. Close to. What is the ROI? Into 100 divided by approximately the margin cost we have seen at that particular level, 1,08,500 rupees approximately. Maybe it could be a little lower value or little higher value, but approximately at this is the value. You got 1.79. That means 1.8% ROI you got. And earlier, how much ROI we got earlier? Earlier 2.4%. And both together we got, this is 1.8. So 4.2% ROI we got, both trades together. And this is a 2,638 and this is a 1,944. Nearly 4,600 rupees profit you got, close to 4,600 rupees, both trades together. How much money you paid for monthly subscription for this software? 5,000. Almost with a shortage of 500 rupees, you got that money. If you really focused on this trade, you would have got, this is there in your bank NIFTY. This is a TCO zone. The first trade you have taken is a high priority, high liquidity zone trade for TCO, because a new supply zone is created. The second trade you have taken is a low priority, high liquidity zone trade, TCO zone trade. Both trades worked. High priority trade worked, low priority trade is also worked. And after that the zone is completely violated in this candle. There was a huge momentum. Let's go to the 1 minute candle, you will get clarity. All of a sudden market moved up for 2 minutes. Now bank NIFTY reached all time high here in this. This was the earlier all-time high. Now Bank Nifty reached all-time high and again it pushed. Maybe institutions kept a huge order flow in this area. It pushed the market. See how it came down. So many points it came down all of a sudden. But anyway, that is a different story. We can't capture that with the help of supply demand zones, because once this zone is violated, that's it. It is no more valid. This TCO zone is no more valid because it is pierced. Maybe pierced zones are almost like violated zones. The only reason I am keeping pierced zones are having the ability to find some lower time frame traps and all. That I will be explaining. Already I made a special video about pierced zones, how they can be used, but not part of your training lessons. Before starting your training itself, I made that video. Before starting the lesson 1.1 itself, I prepared one special video about pierced zones. And that video is available in important analysis and strategies playlist. Probably that could be the first or second video in that playlist. So look into that playlist if you want to understand about how to use pierced zones. But pierced zones are not used for trading purpose. They will be giving you clues for identifying institutional traps. See, by seeing this pierced zone, you will get a clarity. Maybe some kind of institutional traps are here in this area. But anyway, this is at the all-time high. You won't get 100% clarity unless you look into the tick-wise data. Okay, this is about Bank Nifty. Then what about the high liquidity zones? We have identified two high liquidity zones, HCL Technologies and HDFC Life. HCL Technologies also gave a trade, but most of you people are not aware of that. The reason is at present you don't have access to supply demand zone chain, because in the recorded video supply demand zone chain is available only for Nifty and Bank Nifty. Every stock supply demand zone chain generation is not possible. So if anybody will request, I will provide that supply demand zone chain, but that is also a premium service, because I also need to spend some time. So those details already I provided in the premium service video. I made a special video. But if you look into that supply demand zone chain, this is a supply demand zone chain for HCL Technologies. Look into the fourth one here. This fourth one is a high liquidity zone and it is a fresh zone. And when it was created, 18,940, base candles, and leg out is at 18,9, 10 o'clock candle. Instead of 3 base candles, there also you can drop base drop also possible. Let me show you first. So I am moving on to the HCL, because yesterday we identified only 2 high liquidity zones. The HCL Technologies is a 75 minutes daily or 75 minutes. Let me check. This is a daily rally, 1, 2, 3, 4, 5 base candles and a drop candle. This one we fine tuned. I already explained in yesterday HLQ analysis video, because previous video also this was there. I have already explained how to fine tune, but I didn't draw this zone yesterday. Let me go to the 5 minutes, because I already explained. I told you this could be a high liquidity. I am not confirmed, because everything manually you identify is only 80%. But see, software did not identify that zone as a high liquidity. See the fourth one? No, not here. The fourth one is high liquidity. The next one is not identified here. That's why manually whatever we have drawn, it could be. That's why always we are saying. The reason why software did not identify this drop base drop is mainly because of this leg out structure. But manually we identified. At least 80% level we are confirming it could be high liquidity, because it has tested multiple times. This is the first test, this is the second test, this is the third test. Maybe it may give fourth test or it may violate. Today it is violated. This zone is violated. But little above again prices came down. Why? What is the reason? See, prices entered into this zone. Up to here it has given 1:3 RR it has given. But before that, let me explain. This one manually we are assuming it could be high liquidity. Maybe or may not be. At least 80% it could be high liquidity. But this one is a confirmed high liquidity. How software is identified? Like this. Rally, 3 base candles and drop candle. But this also can be drawn if you are, because system software is very strict. The rules are very strict. It won't compromise and draw the zones. But we need not compromise. Manually also, manually when I am drawing, I am convinced you can also draw like this. Drop, base, drop. And I keep my stop buffer here. The high of this. That means this is almost same as this zone. What software has identified. Almost same. But only difference, software identified, we didn't keep any stop buffers. But if you draw like this could be the stop buffer. That way your risk will be, the advantage is risk will be minimized. That is one advantage. And also you will get good RR. Okay, where is supposed to be your target here? Rally, base, rally. This is a 15-minute zone. Inside 15-minute zone, again fine-tune with 5 minutes. See, this is the 15-minute zone. You have a rally, base, rally. This is the target. This is the 5-minute zone, rally, base, rally. See, there is no more 5-minute zones. When price entered into this zone? At 2 o'clock 35 minutes. That means we are in the last 1 hour of the trading session. In the last 1 hour of the trading session, reaching 15 minutes target is almost difficult. But generally what happens, at least last 1 hour, 1:3 RR we will get. At least minimum we will get. So that's why what I did, I just ignored this entire this 15-minute zone. See here till the blue color line, that is the original digital line of what the zone identified by the software, the 3 base candles. But I have drawn this zone because I am convinced this is a leg-in candle. This itself is a leg-in candle. So drop candle, base candle and drop candle. Rather than drawing the zone like this, I have drawn. The advantage I am getting, risk is minimized. But still, with the stop buffer, up to this blue color line. Blue color means the original zone digital line. This is the original zone's digital line. Original zone means the zone identified by the software. And the zone identified by the software I slightly altered. Because I am convinced, as per my experience, this is a drop candle. I can agree as a leg-in base drop. What is the advantage I am getting? Risk is minimized. The moment risk is minimized, I get a RR, good RR. If risk is bigger, RR. Because if I draw this digital line and again add some more buffer on the top of that, I get a huge risk. Now because, see, still the risk is up to the blue color line only, near to the blue color line. So this entire thing is our risk. That is what I have drawn in this tool. You are aware of these long position and short position tools, right? I already explained these tools. This is the short position tool. This is my entry and this is my stop loss. The blue color line is the stop loss. And exactly here, whatever, let me draw one more blue color line. This is going to be the target. See, price reached the target. It went a little below this blue color line, price. So this is our entry. I didn't add any entry buffer. If I add entry buffer again, I won't get this 1:3 RR. So exactly at this, if price enters into the fine-tuned area, we take the trade, otherwise we don't take. And moreover, this is the last 1 hour trade. It's a high risky during last 1 hour. And also remember, cash traders can't take this trade because cash traders has to exit at 2:30 or 2:45. Your brokers will forcibly make you exit the trade. But in futures, in F&O, you can take the trade. F&O you can exit even just 1 minute or half minute before market closing also you can exit from your F&O trades. So this is so definitely this trade should be an F&O. Either you have to take in futures or options. There is no other choice for you. You can't take in cash segment. You can't go for a short trade in cash segment. The intraday trade you can't take in the cash segment. But F&O you can take. See, the next it reached the 1:2. When you got the trade? At 14:40. In 14:40 candle or maybe 14:35 candle. This is the candle. You got the entry. After that next candle it came down. And further came down. And finally reached the target at 2 o'clock 55 minutes. 35 minutes you got the trade. That means in 20 minutes you completed the trade in HCL technology. But you know this trade only if you are having this supply demand zone chain. Without supply demand zone chain, you cannot identify this is a high liquidity zone. You cannot identify because it is a fresh zone. Here also see after 2 or 3 tests, you are assuming it could be high liquidity. This is the first test, second test, third test, that way. But high liquidity zone after multiple tests at any time it will be violated. Today it is violated. So it's expiry date today for this particular zone. So it is gone. But for me this NeoStock software helped me. The supply demand zone chain for HCL Technologies. Sorry, this is Bank Nifty. This is a HCL Technologies helped me to find this zone as a high liquidity zone. You already learned high liquidity zones can be used as an aggressive trade in daily or 75-minute zones. So that's why this is an aggressive trade. In lesson 21 I explained aggressive trades. Please look into the aggressive trade. In one of the, I think I didn't remember, maybe 21.5 or 6 or 7. One of these lessons I have explained aggressive trades. Some 5 or 6 scenarios I have explained in aggressive trades. In that one of the scenarios is this high liquidity zone, lower time frame high liquidity zone can be used without fine tuning. This is not a fine tuned zone. But still you are taking this trade as an aggressive trade. High liquidity zones can be used as an aggressive trade. And today it gave exactly 1:3 RR it has given. See here RR is 1:3.01. That means 1:3. Exactly at 1:3 you need to exit. You can't expect more than that because it is the closing hour of the market. And your fine-tuned 15-minute zone is very, very far away. There is another possibility. You can also consider after you take the trade, the candle is closed. There is a possibility sharply the prices will come down in this candle. But why it didn't come, there is a reason. Exactly at the closing hour of this candle, 1 minute candle, you got the trade. Immediately the candle is closed at the last minute of the candle. Next candle again prices came down. If you look into 1 minute you will get clarity. See here, this is a 14 hours 39 candle. This is the last minute of this 5 minutes candle. Of course, this is 1 minute candle. Generally, what happens after that, sharply prices will come down. See, that is what happened. Immediately, the next minute, prices came down. Next candle, again, prices came up to here. After that, again, it moved up. Moved up. Again, one more entry it took and came down. This time, this zone is, 5 minute zone is violated here. The reason is, it is already tested in this candle. So that's why you might have took a trade in the next candle, you could have exited. Because at the time of taking this candle is not completed. This 5 minute zone is not confirmed. So you already took a trade, and if you want to exit at 5 minutes, either you can exit here. maybe you would have got a small profit. At the time of taking trade, this was your target zone. Because you can't reach 1:3 RR, you planned. You want to exit when prices reaches here. Because there is a 5 minutes candle, if you have a fear that this 5 minute zone may not be violated, you would have exited here. You would have got small profit. Those who did not exit waiting for 1:3 RR already achieved today. A little below 1:3 RR prices went, but you will exit. Okay, let us assume if you exit exactly at 1:3 RR, what is the profit you might have captured? So what is the entry price? 1782.55 could be your entry price. And what is the target? 1:3 target. The 1:3 target is 17171.40. How much? 11 rupees 15 paisa profit you would have got. So what is the lot size and what is the margin cost? Let us calculate. So HCL Technologies, 26 September expiry, 350 stocks are there. So into 350, you would have got 3,902 rupees. That means 3,900 rupees profit you would have got. If you know this is a high liquidity zone. If you know this is a high liquidity zone, then only you would have taken a trade. Because you don't know this is a high liquidity zone, I am sure you might have missed. But why I am explaining is how powerful this high liquidity zone concept. I want you people to understand. See, Bank Nifty you have seen today. Maybe you might not have taken a trade in HCL Technologies, but you would have taken a trade in Bank Nifty. If you looked into Bank Nifty. Why? Because Bank Nifty, the 5 minutes, 15 minutes, even 75 minutes, all the time frames you have, high liquidity zones are available with you. So here, for all the time frames, I have given high liquidity zones. Whichever the high liquidity prices reached, there you would have taken a trade. Today we got 2 trades from this high liquidity zone for Bank Nifty. Those opportunities you should not miss. That is what I am telling you. Maybe you missed HCL Technology, but still Bank Nifty you would have captured those trades. You already learned TCO concepts. Already I explained 3 videos, several examples I have explained in all the 3 video lessons. It could have been a good day for you if you looked into the Bank Nifty supply demand zone chain. But this has given F&O trade. And what could be the price? Because price is almost near to this entry zone, probably the same margin, maybe 100 rupees extra might be there. So let us see ROI. 1,09,500 rupees could have been the price. You got 3.56. That means close to 3.7 ROI you got. Sorry, 3.6 ROI you got. Based on one futures margin cost. That too, the last 20 minutes, last hour of the trading session in just 20 minutes. First of all, the trade itself is last 1 hour trading session. Within that last 1 hour, in 20 minutes, the trade is completed. This is the way high liquidity zones work. Maybe it is a missing trade for you. Forget about it. But the reason why I am insisting is high liquidity zones are such an important. That's why I told you supply demand zone chain, why it is important. If you have a favorite stock, you want to know the supply demand zone chain for that stock for different time frames. You buy that service on that particular day, because from monthly time frame until 5 minutes time frame generating the supply demand zone chain, and it will be provided to you. That way people can make use of these supply demand zone chains. If you really want for those people who are already taking monthly subscription, you have a lot of opportunities. Again, you need not buy a specific stock, specific supply demand zone chain. The existing report itself, you have so many opportunities will be there. See, Bank Nifty supply demand zone chain. How you got today? The TCO zone has given you two good trades. Hope you understand the seriousness of these tools and how these tools will be helping you get a lot of profits if you really make use of these tools. See, tools should always help you improve your productivity. That is what NeoStock Software is doing. NeoStock Software is not telling you where to buy, where to sell. But it is telling you where there could be strong order flows might be there. In that area, you fine tune properly and you plan your trades. And also, as per your risk management and other concepts you learn in your course, by applying all those concepts, you plan your trades. The way how Bank Nifty trades we planned. Because all the premium subscribers got this Bank Nifty supply demand zone chain. See, in a month, at least 90% you get opportunities, high liquidity zones. Those 10% days within a month, the other reports will be helping to you, like Nifty, Bank Nifty supply demand zone chain, or bullish bearish trade setups for daily income trade, for short-term income, for short-term trading. Or hourly income trades also you can use bullish or bearish, but rather than taking bullish bearish trade setup trades, if you are looking for TCO zones, you get more profitability. Because hourly income trade, many times because of market volatility, the zones will be violated. The moment they violate, immediately you get TCO opportunities, trend change horizon. That way you have to plan. Or during the intraday trades, if you want in the bullish or bearish trade setup, look for DIT trades. In the DIT trades, probably you get good opportunities for either long trades for bullish setup or short trades for bearish trade setup. So hope you got the clarity how you can make use of these reports in the coming days, and especially those who have not taken premium subscription, only swing traders can at least get some benefit by looking into weekly income trades and monthly income trades. Don't look into DIT trades and HIT trades. They will expire within that week itself. So by the time you get the premium report, they may not be useful to you. Probably Nifty and Bank Nifty may be helpful to you some extent for your not intraday trades point of view, but for your swing tradings point of view, they might be helpful. Nifty, Bank Nifty. See, previously once you got such kind of opportunity. See, here Nifty we have. See, this is the 75-minute zone. This is a high liquidity zone. Nifty, Bank Nifty supply demand zone, all reports told. That day prices came. See, still if you are holding Nifty, how many points you would have got? When you got this entry? On 9th September. Till today, if you are holding, let me tell you how many points you might have captured. If you are holding, let us assume. Because it is a 75-minute high liquidity zone and also it is a bullish trade setup. How it pushed the Nifty after that. Many people are thinking market is falling, but actually market, the 75 minutes high liquidity zone stopped the market, and also it is a bullish trade setup, and also it is having a zone confluence. 75-minute zone is inside daily zone is inside weekly zone is inside the monthly zone. In all these levels, the zone confluence is there. Actually, from the monthly zone, it took the trade, based on the zone confluence. And after that, you see, this is a swing trade. That's why it has given a very good profit till today. Probably it may go up. But till today, how much profit you would have captured? Till the high of this candle, I am calculating. What is the high? 26011.5. 26011.55. minus what is the entry here at the low of this candle. Actual price went a little inside the zone, but let me calculate approximately till the low. The low of this candle is 24,753.15. 24,753.15. It has given you 1,258.4 points. And the Nifty is a 25 lot size, right? Nifty 26th September expiry, I am just calculating into 25. You got 31,460 rupees. Within how many days? This is for one lot for Nifty. See, the futures lot cost is also less. Now it is 73,618. The time when you took the trade, it could have been 69,000 something, the trade, the future lot cost. And when it was, this is on 9th September, and today it is 24th September. 9th September you took the trade. That means 15 days. Within a half month, you would have got 31,460 rupees profit you would have got. A rounded value, let me say 31,000 rupees profit you would have got. Especially swing traders' point of view, I am telling. Swing traders who have not taken NeoStock subscription, still you would have got this money. 30,000 rupees. Now it would be easy for you, just spending 5,000 rupees from this and taking the subscription. Tomorrow onwards you will be getting fresh reports every day. The free report, NeoStock free report would have helped you to take a profit here. It's a high liquidity zone, 75 minutes. Why it has given more profit is, from here we have a zone confluence with different time frames. This is the 75. See, this is a zone is looking to in a daily zone. We have a rally. Where is it? Something wrong. And a weekly time frame. Rally, base, rally. Or you can also consider drop at the hidden body, drop these two base candles and a rally that way. Monthly zone. Rally, base, rally, but monthly still it is an ongoing candle, so you can't consider. But still it is going, probably end of the month it might be resulted as a leg out candle. But it is an ongoing candle. But software by default assumes till that day. The reason why I am making software assume that is the end of the month candle is to check some advantages, early advantages we get because of that. But the only concern I am having is a daily time frame. We are in the sorry. Monthly, this is the one here. Okay. Daily clarity is not there. Is it because of this body, hidden body? It might have considered as a leg candle, I don't know. Or maybe it has considered like, yeah, I'm sorry, I got clarity. Rally, two base candles and a rally. Rally, base, rally. This is the hidden body you need to see. The close of the candle, this entire thing is a rally candle. Maybe the software might have considered rally 1, 2, 3, 4, 5 base candles, and it could have been a rally candle. Rally, 5 base candles and rally. That way, zone confluence we will get. I think this is the way daily zone has been created here. Rally, 1, 2, 3, 4, 5 base candles, and then a rally candle. This is the way software has considered this. And the weekly zone is This could be a drop candle, a drop, this is the leg out, and maybe these two are the base candle. Then with the hidden body, some hidden body it will get, a small hidden body. Then again this is a rally candle. So that's why it is having weekly confluence. The monthly confluence, maybe it might have considered this is the ERC candle, rally candle, maybe base rally, that way it might have considered. But still it is an ongoing candle. So that's why monthly confluence is not proper until the month candle is closed. Okay, but anyway, the point we need to understand, how we got this much profit is mainly because of the 75 minutes high liquidity zone. We have a video, HLQ analysis video on 9th September. We have discussed about it. If you look into 9th September video, we had a discussion about this particular stock. Even non-premium subscribers also would have looked into this. If they refer 1 week old video, they would have identified this as a 75 minutes high liquidity zone. All these points I have explained. Okay, this is about today's HLQ analysis video. There is, I think, one more stock is missed, HDFC Life. This is a 75 minutes high liquidity zone. We didn't get a trade. Drop base drop. How I fine tuned? In 15 minutes time frame, we have a rally base drop. Again go to the 5 minutes time frame. In the 5 minutes time frame again, we have a rally, 3 base candles and a drop candle. But I have fine tuned with these 2 candles only because of there is the reason why I fine tune like this, to minimize the risk. I ignore the, see, you have to draw a zone like this. But instead of drawing, I have drawn like this. Because the reason is there I have my own logic. Why I am happy with fine tuning like this. One is risk is minimized. Why I have taken the, from which candle the prices are started moving down? From this candle. This is the first candle. Even though it is not a leg out candle, but the actual price movement towards down is started from here. That's why I am assuming this is the area the actual institutional order flow will be there. There is a possibility prices reach here and come down. That in that case I will be missing the trade. Anyway, I can't take the trade because the risk is more. My risk management does not permit. So that is the reason why I used some logic. My experience, I used my experience. Nobody can object. Because everybody's analysis will be based on their experience and past experience and the clarity they are having in understanding institutional order flow. All these things comes into the picture. But this is my experience. So that's why I fine tuned. I am not considering like this is also a base candle, but fine tuned up to here to minimize the risk. And I am believing this is the area the actual order flow will be there. And from this area prices are started moving down, the leg out. Even though this is the leg out, but actually the initiation is from this candle. That way I assumed. Okay, in case if this zone is violated, I have seen a drop base drop, a institutional, a bull trap. I mean bear trap, not bull trap, bear trap. Sorry, I'm sorry, I confused. It is not bear trap, it is bull trap only. Because you took a short trade, if it is stopped out, you will take a long trade to close the position. Long trades means bulls. All these bulls are captured here. All our stopped out trades, the long trades will be captured by these bears. These bears are capturing the bulls. That means they are capturing the long orders. Because here we are going for short order. Whatever the stopped out trades, so that is your long trades are captured here. That means bulls are captured. So it is a bull trap. I am feeling this could be a good bull trap for this particular zone. The problem with bull traps are sometimes institutions, see, we identified. Sometimes institutions may ignore. They may not be having interest to take this trap. At the time, this zone will be violated easily. But otherwise, we get a very good return. That's why, depending on the market condition, you need to plan whether to go for the bull trap or bear traps. That is all depending on the market conditions. You need to take your decisions wisely. Okay, but this is how I planned. But anyway, today, market did not get into this area. We didn't get a trade today. Price didn't reach the fine-tuned area. So this is about the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.